If you still believe you need money to create wealth, you've fallen into one of the biggest traps of the financial system. Money doesn't go to those who work the hardest or those who need it the most. It follows those who understand the rules of the game. While many wait to accumulate capital to begin, others are already multiplying their fortune without using a single cent of their own money. How is that possible? It's simple. They know strategies the wealthiest have used for decades, but that are rarely taught. This is exactly what transformed the life of Robert Kiyosaki. When he was bankrupt, he discovered that depending solely on his own money was a trap. The moment he began to use other people's resources, his path changed completely. What almost no one says is that the rich don't build wealth solely with their own money. They've mastered the skill of raising capital, whether through investors, partnerships, or financing systems. That's the difference between those who remain trapped in a salary and those who create true wealth. In the book, Rich Dad, Poor Dad, one of the strongest lessons is never say, "I can't afford that." That phrase limits the mind. The right question is, how can I get it? That's where financial creativity is born, the ability to find solutions instead of accepting scarcity. This is what I want to show you today, the leveraged wealth method, a system that tears down the idea that you need to start with your own money and reveals how to access capital, multiply it, and build wealth from zero. The three-step framework. The first step of this method is simple but essential. Protect what you conquer. It's useless to earn more if you spend everything, depend on a single source of income, or ignore smart ways to shield your wealth. Diversification, tax planning, and legal structures are some of the pillars that separate those who preserve wealth from those who lose it quickly. The second step is strategic reinvestment. Whoever spends everything they earn is condemning their own financial future. That's why great investors follow a golden rule. A portion of all the capital generated must be reinvested in assets that create new sources of income. That is the moment when money begins to work for you. At this point, you've learned to see opportunities, raise resources without using your own money, finance yourself strategically, build systems of wealth, and protect what you've conquered. But one essential ingredient is still missing. If you protect without expanding, your wealth simply remains stagnant. The truly rich know that it's not enough to save. It's necessary to multiply and do it strategically. While the majority believe that they can only earn more by increasing working hours or seeking a higher salary, those who understand the financial system have already discovered something different: smart leverage. After learning to use other people's money, the time comes to apply that capital strategically, accelerating the creation of your wealth. This is where great investors and entrepreneurs stand out. They don't sell time to make money. They understand that time is limited, which is why they use three main types of leverage. Financial, using resources from banks, funds, or investors to acquire income-generating assets. Automatic systems, systems that make money flow and even while they sleep. People, forming competent teams to focus only on what grows the business. This is exactly where those who take decades to get rich are separated from those who achieve financial freedom in just a few years. The importance of calculated risk. But there is one detail that cannot be ignored: risk. The rich don't run away from it. They learn to manage it intelligently. The majority are paralyzed by fear of losing, while others jump in without preparation and end up losing everything. The successful investor knows that risk isn't the enemy. It's a factor that must be calculated and managed. That is why they never put money into something they don't understand. Always define exit strategies, diversify investments, and use legal and financial protections to shield wealth. The rule is simple: those who run from risk never grow. Those who risk without thinking lose everything. But those who calculate transform risk into opportunity. Following the flow of money. Another crucial point is to understand where the money really is. It never disappears, it only changes hands. The difference between those who live in abundance and those who are always struggling is precisely the ability to identify where money is flowing. Money isn't limited to salaries or savings. It circulates in businesses, investments, and solutions that solve real problems. The greatest opportunities are in unresolved pains. That is how companies like Uber and Airbnb created fortunes by innovatively meeting old needs. Today, sectors such as technology, real estate, online education, and financial markets move gigantic sums every single day. opening space for those who know how to step into the flow. If you are in an environment where no one talks about opportunities, it's a sign that you need to connect with entrepreneurs, investors, and business owners. It's in that circle where doors open and new possibilities arise. The true secret isn't to ask, how can I make more money? The right question is, where is the money and how can I participate in that movement? Financial opportunities are everywhere, but only those who have learned to recognize them take advantage of them. The majority don't see them because they still believe that you need money to make money. The real blockage isn't the lack of capital, but the lack of vision to identify assets and possibilities that can generate income even without initial investment. The market is full of unexplored opportunities. What you need isn't more money, but a strategic mindset capable of seeing value where no one else sees it. Many times, properties, businesses, or products are undervalued because the owners need immediate liquidity. In those cases, those who know how to negotiate can take control through financing, partnerships, or creative agreements without putting money from their own pocket. In addition, there are business models that allow you to start practically from zero. Affiliate marketing, for example, allows you to earn with third-party products without the need for inventory or infrastructure. Another path is solving urgent problems for companies or individuals. A consultant who increases the sales of a company can earn not a fixed amount, but a percentage of the profits, income generated without financial risk. The secret isn't in working more or depending on a higher salary, but in developing the ability to see where the opportunities are and how to access them intelligently. Money isn't only in what you own, but mainly in what you are able to negotiate. That's why, instead of asking yourself, how can I get money to invest? Start thinking, where is the hidden value I can leverage without using my own capital? Building your financial machine. This is exactly where the next level comes in, using other people's money to finance your investments. Banks, investors, and crowdfunding platforms are always looking for good projects. If you know how to structure a solid proposal and show confidence, capital flows to you. What truly matters isn't how much you have now, but your ability to show that your idea is profitable and viable. When that capital arrives, the game changes. It must transform into a system that works continuously without relying solely on your daily effort. Many people go into debt because they don't create that structure, but the rich build recurring mechanisms, automated businesses, investments that generate cash flow, and scalable models. 3 pillars sustain this machine. Optimize to reduce costs and increase profits. Delegate so that the process works without you, and scale what is already working. Real growth doesn't happen when you earn once, but when you reinvest the profits so they multiply. Smart investors never spend the initial capital. They use only the returns to plant new seeds. It's the logic of the so-called infinite return. This applies to real estate, digital businesses, investments, or any recurring asset. Over time, that cycle creates a portfolio that grows on its own. Imagine acquiring a financed property, renting it out, using the rent to buy another, and repeating. In just a few years, you'll have several assets working for you. At the end of the day, financial independence doesn't come from accumulating salaries, but from building systems that multiply money without depending on your direct effort. Every day you postpone that process is a lost day. Money never goes to the one who needs it most, but to the one who knows how to attract it, protect it, and multiply it. You now know the essential steps to create wealth intelligently. The decision is yours. Will you apply this knowledge or let it pass you by? Those who truly want to change their financial life don't just consume this content, but write it down, reflect on it, and start acting immediately. If you made it this far, you have already shown that you want transformation. But remembering is not enough. It is action that generates results. Choose one of the strategies we discussed and take the first step today, because wealth is not built in a single leap, but in small, consistent decisions. If this content resonated with you, leave a like, subscribe, and share it with someone who needs to hear this message. The journey toward financial freedom has already begun, and the decision to follow it is now yours.